Once again, I find another example of the system being rigged in favour of the big four banks in Australia. Now, not sure if you saw this, but last week Standard & Poor's downgraded the credit rating of 23 banks in Australia. They had their credit downgraded due to Standard & Poor's concerns over high levels of exposure to the property market among the banks, which leaves them supposedly vulnerable to a housing correction or a market crash. Now, whether you agree or not as to whether property prices are going to crash, the timing and nature of this announcement shows me, once again, the system is rigged in Australia. Let me explain why I believe this. Firstly, the credit downgrade does not apply to the big four banks, ANZ, Commonwealth Bank, NAB and Westpac. They maintained their credit rating due to Standard & Poor's belief that they are too big to fail and will be bailed out by the government if such a correction was to occur. So, should the big banks fail, you and I as taxpayers need to step in and pay for this. Where else would the government get the money to do this? The big four banks can do what they like because if they crash, guess what? The poor old little taxpayer is there to bail them out. The system is definitely rigged in favour of the big four banks here. Now, secondly, let me explain what this means for the 23 smaller banks like Bendigo Bank, Bank of Queensland, Adelaide Bank Credit Union Australia. It means that the cost of their funding will increase. That's right, the money they borrow to on-lend to their customers for things like home loans will cost more. So if the money they borrow costs them more, what will they do? They'll have to pass on this cost to their customers. That's right, if you have a home loan with one of these banks, chances are that your home loan rate will increase very soon. Now this happens at the very same time the government has placed a levy on the big four banks. Their argument was that the big four banks would not pass on this levy because of competition from other banks who would have the lower rates. But what happens if the competition now has to charge higher rates because of the credit downgrade? Simple. The levy supposedly charged to the big four banks is now passed straight on to you and I as interest rate increases. So, once again, the system is rigged in favour of the big four banks.
Thanks for watching my video today. If you want to see my new videos, either like me on Facebook or subscribe to my YouTube channel. Now, if you have a friend that you think could be interested in this video, please share this video below.